Good day, everyone. Welcome back to the charts. You guys are tuned into the Market Beast edition of the channel here. And of course, your fellow compadre will be stopping in with you once again to provide more technical data on a particular symbol. Looks like today we're taking a look at Sndl, guys. Welcome back. This is our daily price prediction here. If you're just joining us, welcome. Consider hitting the subscribe button as we go along with the content here. We go from the daily up to the weekly, sometimes higher, never lower, because we don't go lower than the 1 day on the traditional markets. My lowest subscribers, welcome back, guys. Let's not waste time. We're going to go over this Sndl short-term price prediction here. So if you're into that, stick around to the end, and let's dive right into the charts here, shall we? All right, so today is November the 24th, 2020. And the current price of Sndl is going to be 0.30 cents, up about 25% for the day. Sorry, guys. All right, so it looks like these are the daily candles. And what we're going to do is before we dive into the charts here, it looks a little bit messy, guys. All of these lines have a purpose, believe it or not. So, yeah, just kind of bear with me here. Or actually, just check out our previous videos. We do explain what all these lines mean on the chart here. But really quickly, let's visit the previous video that was posted on November the 23rd. Excuse me, daily price prediction here, of course. Let's listen in on what we said could take place in the charts here, guys. Make sure that we're actually staying consistent with what we said. We do have a high degree of accuracy on the channel. So let's listen in this, and that information goes as followed. We'll see if this thing can get a turnaround here and bounce off this 25-cent level and potentially push up to the 30-cent level. Okay, that would be a nice higher high in this very small short-term trend here. Because if you notice on this green candle right here, we have a low of about 23 cents. Okay, and if you notice on this red candle here that has had a successful close, the low was about 24 cents. So this is a low here, 23 cents, and this is a higher low, okay? Now, of course, Monday morning, we could open lower, we could open higher, but if the buying interest has some sort of edge in the markets or, you know, some sort of advantage in the market here in the short term, we should get a nice little bounce off this 25-cent level and at least make it all the way up to 30 cents or higher. And so there you have it, folks. On the video there, we said that it could have a bounce there at about 25 cents. And if you notice, let's just back it on up to the beginning of the video there and see if we can get a view. Yeah, if you see that, it's about 0.25 cents at the time of the video that we posted that. And as we bring it on over to present day here, as we mentioned, we have a price of about 30 cents. So it did get a really nice bounce off that level that we said it could take place in the market, and it has done that. So that looks very interesting, to say the least. So some may be saying, okay, so what happens now? Well, according to the daily here, it looks like it has gotten extended just a bit over that purple moving average that we pay attention to, which is the 7-day moving average. For those of you just joining us, very simple. A lot of people don't even pay attention to the 7-day moving average, but you actually have to know how to understand it in order to, you know, pay attention to it. So that's something that I'm paying attention to. It could get a back test of that line, and it's currently at about 25 cents. I mean, it could. I think it's important to understand that what's going on is the markets are going through a consolidated phase, okay? Because, again, excuse me, it's been in a downtrend for quite some time, ever since the beginning of time, guys. And bear markets don't just end with the snap of a finger, okay? They have to take time to turn around, to consolidate, move up, move down. I mean, the asset price is like 30 cents. So if you see like moves of 50% up, 40% down, 20% up, I mean, that's normal market fluctuations for an asset price that's so low. Okay, so expect to see like very large moves in the markets here. And if you know what you're doing, you can clean up pretty well, actually, I must add. So what we're going to do is, as far as the daily, it looks like there's a little bit more downward pressure in the market that could potentially take place here closer towards the end of the week. So that's something to keep in mind. Let's crank it on up to the 3-day here to see if we see anything else. All right, so the 3-day here looks fair. Let's pull up the volume here. Okay, that's a lot of volume that came in on there. But one thing that I do notice here is that the sell orders are now clear all the way up to about 34 cents. So that's a good sign. And what I mean by that is, as we get to the weekly, I'll explain a little bit more, but as long as the price is moving to the upside, and I mean, it's gonna have some rejections here, guys. Don't expect to hit that buy button when the thing is like up 30% and say, yeah, it's time to go to the moon, and you won't experience some sort of negative balance in your portfolio there, because that's not how it works, guys. You should actually get used to buying on negative days above a support level. I explain this like all the time on some of my videos. And right now, if you're planning on entering the market saying, yeah, again, I'm going to hit that buy button, it's up 28%, it's time to go to the moon, I can assure you, you're going to experience some negative days in your portfolio. I mean, I can almost guarantee you that. That's how the markets operate, guys. The institutions buy on negative days, and the institutions sell on positive days. Today is a positive day, and you can rest assured the institutions, they're selling. Okay. All right. So on the 3-day here, yeah, the sellers are clear all the way up to 34 cents. And let's turn it up to the weekly here. So I don't really have much data on the 3-day. We're going to get it closed in less than 4 hours. I'll say that. It does have the potential to move higher. I can see an overhead gap here that needs to be filled. It's already partially filled with this wick at the top of that candle there. But yeah, it's an overhead gap. It needs to be filled with a 3-day candle's body. And that is between 34 cents all the way up to 38 cents, represented at that horizontal line there. So this range here, there's a gap here, just overhead on the 3-day. So that's noteworthy. We're going to keep an eye on that. Maybe we'll get a filling of that gap sometime here in the near future. Maybe on this next 3-day candle, we just have to wait and let the price action determine that. Crank it on up to the weekly. Guys, hit an appropriate thumb just below the video there if you're enjoying the content so far. All right, so we still have 3 days to close on this weekly candle, 3 days and 4 hours. Okay, so that looks interesting. And let me explain more about when I say that the sell orders need to be clear. Okay, this is a very vicious sell order. Sell candle here on this weekly, guys. You see this weekly candle here at November the 9th. This is a very aggressive sell candle. What does that mean? This means that the sellers obviously stepped into the market. Okay, and I know some people who actually bought within this range, they feeling like they're holding bags right now. Maybe you are, maybe you aren't, guys. Again, I'm not sure. I just wait for the price action to speak. In fact, I'm not even speaking, guys. The charts are speaking through me right now. Okay, so don't take it personal or anything that I say, guys. I'm just simply saying what I see in the charts, and that could take place over the next few days or weeks or months in the charts here. Okay, so it's not me, guys. It's just the chart speaking. Okay. So when I see this aggressive weekly candle here, this means that the market needs to be replenished of the sell orders that stepped in to the market on this candle. What does that mean? Well, as long as there's buying, let's just say that there's activity. You see it went up to 34. Maybe I get a small rejection. As long as the green candles are continuing to go up and down and up and all the way up to 58 cents, basically, as long as there's some sort of price action that has some sort of volatile up and down movements, right, in the market. But as long as buying interest goes all the way up to the top of this candle here, about 58 cents, even if there's a rejection there, as long as it's a higher low. Remember, guys, this isn't just some weird random behavior in the market. No, there's buyers in the market and there are sellers in the market. In order to determine whether or not who has the most buying interest or control in the market in whichever particular range, which we're speculatively saying that it's in a sideways consolidation right now, that's how you determine who has control of the range. So let me just kind of put this in perspective. Let me just kind of put the boxes here. I hate trying to teach, guys. I'm really, really bad at teaching. But I know how to look at a chart and understand and tell the story. Remember, it's just a complicated story that you have to understand what is going on. So let me just put this box here. As if we don't have enough lines on the chart here. Let me do this. Let's just put this box here. God, there's so many lines. Sorry, guys. So let's just say the box that I just put on the chart, the price is currently within this range, speculatively within a sideways consolidation. Yes? Follow me, guys. So let's say the buyers have the most control within this range. And for those of you listening in, I just put a range in between 14 cents all the way up to about 56 cents. Let's say the buyers have control within this range. If the buyers have control within this range, what you're going to see is you're going to see a replenish. You're going to see the markets get replenished of this weekly candle here, this very aggressive weekly candle. And it would look something like this. It's not guaranteed to look exactly the way that I'm going to put these squiggly lines in the chart, but just be open to the fact that if you see something like this, you'll know that the buyers have the majority of the control within this range and the price is trying to move higher. So let's just go ahead and put it on the chart here and I'll show you an example. So we just went up to about 34 cents. If we get rejected back down to 25 cents, that's fine. As long as the price is continuing to make highs, new highs and higher lows, right? And as long as the price action reaches all the way up to 58 cents, maybe it gets a rejection, but as long as it's making higher highs and higher lows and eventually breaks above this 56 cent level, the buyers, in hindsight, well, you know, kind of looking into the future here, it would mean that the buyers had the majority of the control within this range between 14 cents up to 56 cents. Illustrated on these squiggly lines here, guys, because again, it's all about making higher highs and higher lows, okay? But again, this Sndl symbol has been making lower lows and lower highs. But if you see something like this start to play out, there's little green squiggly lines that I just put on the chart. If something like this plays out, then that would be the confirmation that I need to see to know that the buyers had the majority of the control within this range. But that must happen. Currently, the sellers have put in this sell order in the market right here. This November the 9th candle, I've circled this a few times. And so far, the market needs to be replenished of this sell order candle here. And so far, they're just pending sell orders. And no one has stepped in to buy up this entire range just yet, between 34 cents all the way up to 58 cents. Hopefully that made sense, guys. I really sound like I sound confused when I explain this stuff, but I do the best I can, guys, okay? So that's what I need to see in the markets, higher highs, higher lows, and it eventually needs to take out this entire candle to know that the market has been successfully replenished from this dump off, so to speak, and the markets will have an opportunity to be mature enough to reach new highs. So let's just wrap this thing up and say, I'll let you guys know where I think the price is headed. I'm going to base this off the daily here. And I'm going to say that since we had a really nice day, I guess we can have another nice day tomorrow. That's fine. Maybe up to like 40 cents, 45 cents. That's fine. But the price tends to gravitate more towards the 7-day moving average to find support or try and retest support, which is currently at about 25 cents. If that happens, let's say we get a move down tomorrow, that would be normal, guys. If we just kind of back test 27 cents or even get as low as 25 cents or even break below that level, it's normal, guys. It's the price fluctuations. You just have to be able to stomach these moves, okay? So that's what I'm going to say. Thanks for tuning in, guys. Be sure to leave an appropriate comment just below. Let us know where you think the price is going over the next 24 hours up to a week from now. And it's Napoleon Macro, guys. I'm going to go ahead and sign off. Hopefully you enjoyed that. And bye for now. Take care of yourselves, and we'll talk very soon.